Hello, I'm Natalie MacDonald and you're watching Sydney Direct. Gold, historically a great hedge against inflation, but what happens in a deflation scenario as we're hearing rumours of all over global markets? Well, I spoke to Lynch at OptionsXpress to find out exactly that. Aaron, pleasure to speak with you. Thanks so much for taking the time to chat with us today.
Oh, absolutely, Natalie. Pleasure to be here.
Thank you so much. So today we're going to be talking gold, and in those heavy post-holiday sessions, there really was a negative sentiment weighing down the precious metal. What caused this turn-off almost?
Look, I think the outlook for 2015 really started with a view that the inflation story hadn't bitten yet, against a backdrop of what we're all expecting in 2015, which was a rate rise in the US. That was pretty much the story leading into the end of 2014. But as we've got further into 2015, we've returned to normal post-holiday volumes. The inflation story is it's certainly not progressing. And if you look at the Fed in the US, they're really taking that step backwards from that aggressive push to raise rates. So I think that really did affect the markets in terms of, I guess, their wanton exposure to the precious metal we know as gold.
Now, despite this downward pressure that we had seen early in the year, concerns regarding a Greek exit of the euro have actually acted to lift the precious metal. There's been comments that should we see a Grexit, price could even go to $2,000. Walk us through the market thought here.
Oh, look, gold is one of those fantastic markets, and having been involved in commodities now for over a decade, I can tell you that everybody's got a view on gold, from the uber bulls to the uber bears, and so therefore opinions are very quickly and commonly thrown around. I do remember back in the latter part of 2007, 2008, 2009, people were talking about gold at $5,000 an ounce there. My attitude's always a simple one. It's got to get past, in the most current case, $1,500 an ounce before we could even get to $2,000. So I think what we've got to do is say the concerns in Greek are certainly an event that will cause people to reassess their positions. They'll look at whether a protection style investment in the form of gold is the best investment. And look, certainly that brings that element of the market that revolves around that concern of fear, and people do have that safety net with gold. So the market's thinking at the moment, I would think, is the people who are always looking for that Armageddon situation where gold is likely to go to X amount of thousands of dollars an ounce. And I will caveat that by saying that most people who call gold up to $2,000, $3,000, $4,000, $5,000, $6,000 an ounce are generally the ones that are already in it, as opposed to the ones that are thinking down the track that could be the case. So the way I think the market's looking at the moment is the inflation story. Will it roll out? Will it eventually arrive, given all the printing we've been involved in? At this stage, it's fair to say it hasn't, and the likelihood of that changing in the near term is not likely. And I think those will be watching Greece and the euro very importantly to see whether we do get the first of the countries leaving, and then if the potential for others, so if there's any contagion effects. But at this stage, I think it's a balance, and if you look at the volumes that I'm watching with something called the Commitment of Traders reports, what we're actually seeing is the speculators are actually starting to unwind some of their long positions. The commercials are starting to have been heavily short, and they're starting to actually unwind some of those. So we're not at what I would consider to be the wide ends of the spectrum in terms of that report where we might expect big moves to surge from. So at this stage, I think it's really business as usual for gold.
You've touched already on that inflation story, and gold, as we know, historically is a great hedge against inflation. But what about the deflation scenario that we're seeing at present? A lot of speculation across global markets that actually it's deflation that we're looking at for the year.
Yeah, look, agreed. And as agreed, I can't see the inflation story arriving. I really can't, given what we're seeing, unless something dramatically changes. It's interesting that there's a common concept that gold is a great inflationary hedge. If you actually take a look at it in terms of historically, all the data on it, there is certainly a case that suggests it isn't necessarily the best inflationary hedge. It comes down to the fact that where you see inflation, if you are priced in an asset like gold and it's in US dollars, well, the inflationary events really either got to be correlated or negatively correlated to the US dollar for you to see a benefit. But let's say here in Australia, we might see a Greece leaving the EU. We might see Russia move into greater recessionary times. We might see Russia's inflation continue to grow. But whether that's going to tell the story for me as an Australian investor in US dollar pricing in gold relative to where I am, that's where the concession might be that maybe it's not that inflationary hedge that it needs to be. So overall, it's a fairly good, one of those market, long-term held beliefs. But whether the reality is actually true based upon where you are is important to do a bit more further research on.
Okay, Aaron, let's put some prices on the table then. With everything that we've discussed today, where do you actually see gold prices heading within sort of the mid to longer term?
Okay, so 2015 for me really suggests, from a couple of long-term technical patterns and some cycles that I watch, for me we're around about that $1,200 an ounce level now, and that's really an accumulation zone. Now that has been good support in recent times. Now if that's to break down, currently the low's about $1,147 US. If we see that break on good volume and certainly on good momentum, prices are heading lower. In terms of an upside target, I think we could still see gold trade a bit range bound in 2015. For me, the target using the 2008 low, 2011 highs, and looking at a technical area there, about $1,302 US is really what I would consider to be a pivot point. Above that, I'd be very comfortable to start looking at opening long positions and shorts below 1147. But for me, we might, given that the inflation story is not coming, the US dollar without the hope of raising interest rates, until we see some positive signs there, we might actually see it continue to bounce around that 1147 to 1300 level. But in terms of definitive breaks above 1300, I'm a bull, and below 1147 I'm a bear.
Aaron, thank you so much for your comments today. Really great chatting with you.
Not a problem. Thank you.
For more commodities news, do stay tuned to Dukascopy TV. For now though, it's goodbye from me.